Hey folks, welcome back to Finance Fridays. I'm your host, Lucas Balahood with Coldwell Banker R&R on the Balahood Group. I'm joined today by my good friend Alex Jobe with RBC. Alex, how are you doing today?
Good, happy to be here. Thanks for having me, Luke.
Always a pleasure. So this week, I want to chat a little bit about it's the start of June, and I want to look at a little bit of what happened here in the real estate market in Durham Region in May. DRAR, Durham Region Association of Realtors, recently released their market stats, and it looks like again the cost of borrowing is really influencing the market right now. But certainly, one thing I want to say is the sky's not falling. The average price is at $995 right now. We've seen a little bit of similar numbers that are output in terms of sales and new listings that have come on the market. But if we're looking back, the last time that average prices were under $1 million, Alex, was back in November of 2021. So it's been a few months since we've seen seen the prices like this. Which is not to say it's a bad thing. It's certainly a good thing for buyers. It's since the peak in February when it was well over 1,200,000 and 228,000, I think it was at that time, was the average. It's certainly a big shift that we've seen in the peak. But homeowners, if they've been they've still gained a lot of equity over the course of the last 2 years during this really crazy peak that we've seen in the real estate markets. It's still up year over year from last May, still up 10% in terms of the value that you're gaining in your home. So it's still, the sky's not falling in this sense. It's just coming a little bit back down to earth, and with the higher interest rates out there. So I think that's where we're at, and it's not going to necessarily mean that it's going to take off again. This is probably a trend we're going to see for the next few months.
So from last year, May, to this year's May numbers, most clients still have an increase in value. Is that what you're saying?
Yeah, so last year's
prices
average sale price, the average sale price was $902,000 in Durham in May of 2021. We're at $995 now, so just about 10% there, or a little more.
As people sit with their equity, I feel like they think it's like theirs to have. And they have to remember that, markets change and things move and, the prices fluctuate. So what you would have got in February, March, and April is maybe not what you would be getting right now. And for a seller, that's hard to receive. But for buyers, this is a good thing.
Yeah, well, in the added inventory, it's funny because like last month, we started talking about what we saw in April. There was a big influx of new listings from, March to April and now into May.
Okay.
And there's a new stat that's come out from Toronto Regional Real Estate Board, actually, around the percentage of listings that are actually relisted properties. And that represents about a third of the market as well. So, there's still this balancing happening between what a seller is really willing to take, because their expectations are still at the peak. We're still almost too close to that. Yeah, so it seems like, they're but some buyers have also, made sort of taken a break from their shopping. Like we were talking about, March break was there. We had some gorgeous weather in April. Certainly started that way or certainly was that way in May as well. And June has been a little crappy the last couple of days. But it's something that is just a symptom of behavior of people right now. So their expectations are a little bit out of whack, and we're going through a correction in the market, is to be a good operative word there. And this is not a bad thing to say, because rates of inflation have been going up like crazy, and borrowing costs are going up as a result of that, to try and slow that kind of stuff down, right?
So I will just recap on that. I mean, I hate coming on here and telling you that rates have increased again. I wish I could tell you the opposite, but the start of June, the Bank of Canada did change the overnight rate by 50 basis points, which resulted in RBC changing their prime rate immediately the next day, from 3.2 to 3.7. So you're talking borrowing costs. I wouldn't be surprised if our fixed pricing changes. We haven't seen in the last week, we haven't seen any adjustments, but like I said, I wouldn't be surprised if they move as well. And they're talking, the forecast is that we're expecting more increases throughout 2022. So it's just like buckle your seatbelt and we're in for a ride here. I'm with the interest rates going up. with prime changing, it does affect our clients on variable rates, variable interest rates, but also on secured lines of credit. So we're seeing a lot of clients come in and just reevaluate their financing. Some people refinancing or locking those into mortgage segments if they can. And because that monthly cash flow is changing, the cost of borrowing is increasing. You get a client that when prime was 2.45 and they were borrowing on a secured line of credit at prime plus 0.5, now you're into the 4% range on that money borrowed. So, it's a good time to come in and speak to your representatives at RBC so we can help you manage that money.
Now, last episode, we talked about an example of blending or having a mixed split, I think was the proper term you used, was the split payment between a fixed and a variable using a $500,000 mortgage. Now, I like to say that I'm a math guy, I'm a numbers person. And so I went through and I said, okay, if I'm going to do $250,000 on a fixed at 5% over a monthly payment, 25 years, 5-year term, I used the mortgage calculator on the RBC website, and I got a monthly payment there for that portion of $1,396.22. And then I used a $200,000 or $250,000 mortgage on a variable portion, which was at 3.3% over 25 years at 5-year term, all that good stuff. And the monthly payment there gave me $1,224.91. Right. So but then again, I had to figure out what's my net difference if I were to do, in comparison to doing the entire $500,000 mortgage at a
5-year fixed
rate. Right. So that came out to $2,792.44. So there's definitely a difference there in what your payment is doing the split.
Yes. So as you were saying, that split of $250,000 on a fixed, $250,000 on a variable segment, that is allowed within our Homeline plan product, and clients can utilize both rate options. So by doing that, when you compared it to the 5-year fixed, your savings was about, or the difference in payment was about almost $200, right?
I think it came out to a little 171, around there. Awesome. So it certainly is a difference. Looking at the price of gas, we were talking about inflation. That's a tank of gas right there, $170.
Yeah, that's right. So maybe that's just the ticket that the client needs.
Yeah, exactly. But you know what? It is definitely, like you mentioned a little earlier, the sticker shock of looking at sort of the difference of what someone could have borrowed 6 months ago versus where things are at now and where they're likely trending is definitely a bit of sticker shock for people.
With our buyers, I feel like they're educated because they've heard, they're in the market to speak with their mortgage specialist regularly. They're out shopping with their realtor, and they're, trying to keep their finger on what rates they're doing. But our clients that have been in their home for a while, and let's just say their mortgage is coming up for renewal, I find that's kind of a shock factor. Whatever you got 4.5 years ago, and you're coming into the bank to sign your renewal papers, and it's gone up. It's a change. But you do have the option to go back and change your amortization, and even look at consolidating other debts that are driving your monthly payments higher as an overall cash flow. So we really work with our clients to try to find a solution that works for them.
No, and that's really important, right? You have to have, your mortgage specialist as a partner in those decisions and helping with all that planning. And again, making sure that you're working with the right realtor who's, keeping you informed in the trends in the market, what's going on in your neighborhood, what's going on in the area or the type of home in that, where you want to go, maybe if you are going to be moving in the future to downsizing or something like that, which has certainly been a lot of people have been trying to do over the course of the pandemic. They were trying to take advantage of the value of their home, get into something smaller, and use some of those resources for something else. But over the past 12 to 24 months, it's been hard to find homes. So it's certainly been a big shift for people that way, that it's, homes are taking a little bit longer to sell, which has been a little bit easier on buyers from day-to-day sort of thing anyways.
Mm-hmm.
So, Alex, the only other thing I wanted to touch on here, now I don't know if you're a golfer, but at Coldwell Banker, our brokerage, we have an annual golf tournament, a charity golf tournament every year out at Black Diamond Golf and Country Club. So this year, I'm going to try and get you to come out with us, because on July 21st,
I'm invited.
Of course you are.
Oh my
and
goodness.
any of your clients should be coming too, because all the proceeds from that event go to the Boys and Girls Clubs in both Durham Region and Kawartha Lakes. So we're holding that event on July 21st. So if anybody's interested in that, we certainly encourage you to participate and reach out and get some more information, because we'd love to have you. There's golf, dinner, loot bags, lots of prizes and good stuff like that.
Awesome.
So it's always a blast. So certainly we need to see you out there this year.
Okay, I just need to get to the driving range before I show up.
But
I'd love to.
It's not about how well you golf, it's just about having fun.
Awesome. Look forward to it.
Alex, is there anything else that we should be touching on here today? I think we've covered quite a bit.
I think we covered a lot.
Yeah, no, certainly. Well, I think we'll leave it there then, and we'll regroup here and chat again in a couple of weeks. I know the next announcement from the Bank of Canada is expected. I think it's July 13th. So certainly we'll be in tune to see what's going to be coming from them.
We'll do another update. I have a feeling
exactly.
I know what I'm going to share, but I'd love to change the two.
Well, we'll see how things have been going then, and certainly hoping for some nicer weather too as we get into the summer and through Canada Day and those kind of good things.
Awesome.
All right. Well, we'll see you again next time, folks. Feel free to follow along, leave a comment, ask us a question if you have any, and you'll find our contact info at the end of this video. So until next time, have yourselves a great day. Bye for now.